All right, so in today's session, we're gonna look at, remember last week I introduced the trading and profit and loss. So today what I want to do is I want to do a full trading and profit and loss question for you guys. So in CD format, we're gonna do it in the vertical style. After we finish with that, I have a cash book question now we could look at, and if time permits, we could look at a simple petty cash as well too, Navin, right? So we kind of touch on a couple different areas all at once today. So we're starting with the trading and profit and loss account. Now, the approach that I like to take when we're doing our trading and profit and loss account, and generally with all accounting questions, is I encourage students to familiarize themselves with the figures. We need to go through everything here and have an idea beforehand of where we're going to be using it, where we're going to be putting it. Now, initially, it might take a couple of minutes to go through, but as you continue to practice doing this, the length of time that it takes to do this is very minimal, but it's important because it actually saves time later on when you actually do the question. So it's like, like if you watch those cooking channels, you'll have a sous chef prepping everything so that the main chef could be able to whip up the dishes quickly. It's the same thing. You want to prep so that when time to actually do the main course, which is the actual trading and profit and loss account or the balance sheet, we already know where everything is going to be going. We know where to find everything. So as we go through these figures here, I'm going to use T if it belongs to the trading account. I'll use P&L if it goes to the profit and loss account. All right, that kind of self-explanatory. And I'll use balance sheet BS if it is going to the balance sheet. Right? Now, the things that go in our P&L account includes expenses and income. We kind of talked briefly about that last week. The balance sheet is going to include things like assets, liabilities, and capital. In a trading account, we're going to have things like sales and anything related to sales like return inwards. We're also going to have our cost of goods sold, which would involve things like stock or inventory, purchases, returns out, and carriages and things of the sort, right? So for example, sales and purchases, these are two trading account items. Rent and rates is going to go in my profit and loss account because this is an expense. This is going to go in my P&L account because this is an expense. And I usually with P&L, we're talking profit and loss. Another P&L, wages, that's like a salaries to employees. Insurance. So some businesses might insure stock, they might insure equipment. Shop buildings is an asset. So that's going to go in my balance sheet. Shop fixtures, another asset that's going to go balance sheet. Accounts receivable are debtors. Remember, we talked about this last week. So this is our balance sheet figure. Trade expenses, profit and loss, expense. This is kind of controversial, with the word trade expenses here. I don't know if to treat this as like a carriage in. So let's put this in the trading account for now. Accounts payable, these are creditors. This is our balance sheet item. This is our asset, and it'll go in balance sheet. Capital section, balance sheet, asset, balance sheet. Motor running expenses is profit and loss item. That's an expense. And well, capital balance sheet. So by doing this, you already have an idea where we're going to be using figures. Now, when you finish with your list of balances, there's always notes and instructions and for the question. So from the following trial balance of C. Winter, that's the name of the person we're going to be doing up the financial statement for, who has been trading for 1 year, you are required to draw up a trading and profit and loss account, an income statement, for the year ended 30th of June 2017. A statement of financial position is not required, right? That's the balance sheet. Inventory at the 30th of June 2017 This is closing inventory. Was $4,166. Now, he's been trading for 1 year. So what it meant is that there's no opening inventory. Yeah? A business that was in existence for some time would have an opening inventory. What will happen in 2018? This closing inventory becomes the new opening inventory for 2018 because you have inventory that you close off with. Does that make sense?
Yeah.
Good. So let's look at the actual account now. So we always start off with the name of the person, C. Winter. We're going to do trading and profit and loss account for year ended 30th of June 2017. Now, I'm going to use two columns. Some books sometimes would have three columns. So because this is a simple trading and profit and loss account, two columns would suffice for what we need to do. Right? So we're starting off with sales. There's no adjustments to make to our sales, meaning that there was no returns. Nobody brought goods back to us. Usually, if there is return inwards, we need to deduct that from the sales figure, right? And we usually indicate deduction by using brackets. So when you see a figure in brackets, it means that we're minusing that figure, right? So our net sales after any adjustments will be recorded here. In this particular question, no one returned goods to us, so we are fine, right? So the first part of the trading account is to calculate your net sales. After you calculate net sales, we want to then work out what is our cost of sales or cost of goods sold, right? Now, the cost of goods sold involves taking any opening inventory, which we do not have because this is a new business, but I'm writing it here still. And to that figure, we will add our purchases. Right now, this is where I'm going to use my second column. So this is like a kind of tally column. So there's no opening inventory. Our total purchases for the period was $23,803. Right now, when I add these two together, if there was any opening inventory and I add my purchases to it, this gives me what we call the cost of goods available. And we could add in for sale here. Right? But more importantly, this is the cost of goods that we have available. We had used an analogy last week where I talk about stocking a chiller to sell drinks. And if we had drinks in the chiller, that's our opening inventory. We go to the wholesale place and we buy some more cases and come back and fill up the chiller so that all the shelves have drinks. That would be the total cost of whatever money that we would have checked for the purchasing of the new drinks. And we would have checked up how much drinks we had before we went to buy drinks. We will have the cost of all of the goods available for sale in our chiller when we add those two together. Now, if we sell goods for a week, and then we open our chiller and we count up how much drinks we have and we put a figure to it because we will know the price of each one of the drinks. The remaining inventory or closing inventory, if we subtract that from what we had, what we know the full chiller was, that will tell us the cost of all the goods sold. Now, what we do is we subtract cost of goods sold from sales. So when I get this figure, I'm going to put it on a separate line. So I have here, grab a calculator. 23,803, sorry. minus 4166. So the cost of goods sold, I'll put it in green, is 19,637. Put that in our
Sir,
bracket.
I think in my test, this is where I messed up.
Yeah?
I had put this value just underneath. I'd put it like
Under the
underneath the
41,000.
166, and then I just continued,
Yeah.
and I think it just messed it up.
Right. So here, because this, what we're doing in this little section here
Mm-hmm.
is we're trying to work out what this figure is.
Yeah, okay.
Yeah? Because that
I
figure,
put a figure by less cost of wait. Yeah, I had put a figure there. I don't know how I got a figure there,
right.
but
So
I put a figure there.
so this here is a heading. When I write this here, this is a heading,
Mm-hmm.
and the orange box is the calculation to find out what that is. So when I
Okay.
find it out, that's why I'm using this column here as a kind of tally column,
Okay.
right? Now let's have a little dispute about this, right? Some teachers just use 3 columns, 2 columns. I went through this with one of my other Form 5 online students, and on the CXC paper, most of the time for the income statement, they give you
Yeah.
2 columns. So you really just have to improvise with what you have. Really and truly, your final column is for totals. And
Mm-hmm.
if you have 2 other columns, if you're using 2 other columns here, is for like working out subtotals, right? So this is a simple trading and profit and loss. If we incorporate things like return outwards and carriage inwards and stuff, I could add a third column here and work out like purchases, because purchases in itself has a few more calculations involved in it. You know, for example, let's say we purchase goods, but then we return some goods back to the suppliers, return outwards, right? So we might have purchases, we return some goods. So that's a different figure now. And then maybe we have to add our transportation cost. So we have carriage inwards to add to that as well,
Mm-hmm.
right? Then I will put a third column if I have all these things to do. And I'll call this one net purchases, just like how I have net sales. And when I work out what the net purchases figure is, then I'll bring it back into this column to add to my opening inventory right here.
Okay.
Yeah. So the extra
Yeah.
columns, which tend to confuse students a bit, are really for like working columns if you want to think about it like that. Your final column is usually for like main totals, right? So you see like how you do sales could take place right here. Usually we'd write sales, and then it returns from sales right here, and you get that figure. And then you go work out the cost of goods sold after. Once you work out cost of goods sold, you bring it back across on this side. After you bring it
Okay.
on this side now, this is where we would subtract the two. So 28,794 minus 19,637. I get in here $9,157. This is my gross profit figure. And once we get to this point here, this first part here, our trading account is complete. This blue section is our trading account. Next, what we will do is we would have less expenses now. Now, sometimes we have income. Remember, I taught you guys about commissions and rent received, right? We could call this other income or other sources of revenue, right? We don't have anything here, so I don't need to write anything. Then I'll come and I'll write here now less expenses. And again, this is where I'm going to use a tally. So what I like to do, remember, I was telling you this with the trial balance last day, right? As I go through and I use these figures, I scratch them off, right? We use sales, we use purchases, We use the opening inventory, a scratch off that. Sorry, the closing inventory, a scratch off that. And now I'm just going down in order, and I'll write in the expenses. We could always populate the figures after. I just don't want to miss anything, right? Rent and rates. So I'm telling you this based on like my experience as a student in school. And like, just like how we identify where you make the little errors, Navin, this is where I used to make little mistakes. So to compensate or to accommodate for that, we kind of put our little systems in place. So we coming down our list and we know we writing everything as we come down and we ticking them off, right? And that's why we label all of this, right? Oh, look, this is why this is important. Remember, we say we was going to include this in the trading account. So what should we gonna put this now, right? Hey, if you know, glad as be when things like that happen and you're using this because now you could just grab everything and imagine if I was writing on our board problems. Right? You shift all of that down. Our right. So this part here now I'd put this in a different color because this is based on assumption, right? I am assuming that these trade expenses has to do with trading, right? Like a carriage inwards, for example. So if we add this 9, 0, 13, 4, right? So this would be our cost of goods sold now. Cost of goods available for sale. So think about it like this. Remember, we was using the example of me going and buy the drinks and stock the fridge. But I ain't took any drinks on my back, right? I might need to hire a car or pay somebody to take me to go and get. Let's just assume I do have a vehicle. Or even if I have a vehicle, I had to put fuel. Understand?
Yeah.
That was like a trade expense. So we'll include that there. Now I can move up my less closing inventory. Okay, subtract that now and see what we get. 24,309 minus 4166. So this works out to be, remember, always remember that you had to subtract this figure from your sales, right? This is another point at which mistakes could happen. This works out to be 8,651. That's our gross profit now. Seen it? Right? Then we could add other income. So for example, if we had like a rent receive or commission, right, that would be a form of income. Other things that is added is not an expense, right? But we generate some additional revenue there. And then we were at the point where we were writing out all the expenses. So now I could take this one off. So you see the importance of how it come in handy when it is we label all of these things and we go through ticking off. This was the point I was making. Sometimes you'd realize, hey, I didn't use this figure. And you had to make your adjustment. Yeah? So we go now again. Last one is the motor running expenses. So that was the last expense that I need to use, right? Now what we'll do now is we come in our tally column. Extend these lines a little bit. and drop these figures in. So rent on rates was $854. Lighting expenses $422. Wages $3,164. Insurance $105. Motor running expenses $1133. And then we will add up all of these figures now. So you see how I'm using it like a kind of working column. And bring it across here now. Now, the importance of doing stuff like this is so we now have like totals. We can know what our total expenses were, what the total gross profit was the total cost of sales. That's what I describe this final column as being a total column, right? You know what your total net sales were, what your total cost of goods sold were, what the gross profit was, what the total expenses was, and then the difference between our gross profit and our total expenses is what is going to give us our net income, or we sometimes refer to as our net profit. And we draw a double line underneath it. Now, the trading and profit and loss, although it has the word account in it, is not your usual account where you have like a debit and credit and you're gonna have to balance two sides. Right? It doesn't work like that. But it's important because when you finish with this figure, usually you have to use this net profit figure to do your balance sheet. So if you make a mistake here, it will affect the balance in the balance sheet. Understand?
Yeah.
Yeah. All right. So you want to try one of these on your own? Let's try one of these and then we do the balance sheet. So I'm going to give you a question to try. You're going to use the same approach that I did. And then I'm going to come back to winter and we're going to do the balance sheet for winter and then you'll do the balance sheet for this question after I give it. So I'm gonna put the question here. I'm gonna take a copy of this and drop it here. Because so you can use it as a little guide. Right. Everybody can see that?